we get a question, well, what happens if change of government?
The very quick answer is
Nothing.
Nothing. And this is not us knocking our competition or the people that think they're our competition. I mean that with respect. The last 12 months, 87% of everyone that's invested has reinvested again. The rest of them haven't got the funds to invest. That makes us
Proud.
incredibly proud.
Well done, you, sir.
Thank you, sir. So, good morning, good afternoon and good evening. All depends on what part of the beautiful world you're listening to this. My name's Lewis Hall. This is the CEO and the founder. This is Christian Woollard, my good friend and business partner.
Hello.
And today we're here to talk about our investments and how they're structured. So lots of people reach out across all of our platforms. We speak to hundreds of investors on a daily basis, and everyone always says, how are your investments structured so secure? So I'll hand you over to Christian because he's the wizard at all of this, and he will explain exactly how we structure them and how it all works. Over to you, my friend.
Thank you very much. And good morning to you. Good morning as we're recording this. So as a business, we put the client first. The investor is first, and that's part of our a ethical, moral approach. But also that is a requirement under FCA guidelines. The client needs to be protected. So we have what we call the assisted living investment. It's a corporate bond. Basically, it's structured as a loan note in us as a business, and we have 5 key pillars of investment strategy in which we deploy invested funds into. The first one is we buy assets that have a long-sitting 25-year government-funded housing provider that typically operates at a structured net rental position, all full repairing leases, so we don't have to worry about the management of the property itself. So that's one straight line investment strategy. Second pillar is us doing developments ourselves. So whether that's ground-up developments, whether it's buying old office blocks, converting them into residential units, and then offering them out to the housing providers that we work with. Now, bear in mind, we work with the largest housing providers. Our preferred individual one, I won't mention names, but they have over 9 billion of assets on their balance sheet. So extremely secure.
I'm not going to interrupt, but but for my last time, say that number again. How much value have they got?
9 billion.
And they're our main provider.
They're our premier one. We have a number of providers we utilise, but where we're doing the long 25-year lease positions to them, having an organisation like that in the background that has the capability to support such long leases, allows us to feel confident and secure in what we're offering our clients. But before you interrupt, importantly to note, in that structure where we're going to buy assets, develop and so on, we actually bring those properties to those providers first and to say, does this work for you? Do you have the contracts for this? If we redevelop it, how do you want it redeveloped? Do you want it structured in a certain way? And we won't buy a single asset until they sign it off and say, yes, that's perfect, go for it. And they don't mind if it's going to come online in 6 months, 10 months, 12 months, whatever. They'll commit to that property coming through into them. So that's pillar number 2.
One thing I want to add there, and I think it's vital that I do this, we get, because I've tracked it, 15 comments a day, probably more. If it was that good, you'd fund it all yourself. If someone could show me how you can fund from the bank billions and billions of pounds worth of mortgages to go and purchase all these properties, you have my attention. It's impossible. And we wouldn't be a very good investment company if we did something like that.
Exactly. I mean, it's a win-win. Our clients get to win, we get to win. Our clients, we can react quickly because
we're in control.
We're in control. We're not having to go to a bank, and then they take months and months looking at it and doing their own due diligence. We can actually react and work in the market.
So that's number 2.
Third pillar. We work with Duncan Bannatyne and Thomas Williams in their assisted living project, which is a pre-IPO REIT. Our clients can invest directly with them if they want to, or they can come through and into our blended pillar investment strategy. So we're doing a lot of work with them. They equally are working with the same top tier provider that we work with. And the structure of that is, yes, there's an income stream on a monthly basis for investors. But it's all about the IPO. It's about the multiples, and within those multiples, I know they're hunting for a 30 times multiple. In our modelling, we're working that it's most probably going to be a 10 times multiple, and we're raising in excess of 200 million with them into that structure.
Well on track.
And yeah, it's well on track, and we have both institutional money coming in and private high net worth sophisticated investor money coming into that, and that will float within 3 years, and that also then supports what's happening at that back end point into our bond, our corporate bond. Then we have another property development bond that we're investing with in London, well, based in London, but it's covering the whole of the country, and that is specifically generating properties for assisted living government providers. Large schemes we're involved with, and we're equity partners into that structure.
Effectively, it's the Home Office and NHS.
Yeah, all of that, and that's so that has a 2-year cycle, that bond. And then lastly, we still do what we did a year ago, which has been running for a year, where we take the head leases on properties and offer those and sublet them to housing providers on minimum 3-year. It's typically 5-7 year leases. And there's a margin difference between what we're paying for the rent and what we're subletting to the housing providers. And so those are the 5 pillars, and it's all surrounded by assisted living. And because assisted living is not like normal social housing, it's not asylum, it's not homeless. Assisted living is for people that have long-term needs. They might be coming out of hospital, they might have special needs, they might have disabilities, learning difficulties, etc. And they need long-term care, which is why we get the long-term structured contracts, which last for 25 years. And some might be a 25-year, but it's really a 5-year rolling, each 5 year. Others are actual 25 years. So it's a secure model to support what we're doing on a long-term basis. But you might say, okay, well, that's all great, but how am I protected? So the way we structure it here is client money comes into Unique, and Unique then deploy those funds into the various pillars. We don't specify what percentages go into each pillar, only because we need to be reactive and move accordingly, and so therefore we invest and chop and change to whichever model is going to be working more efficiently in line with the returns for the investor. But we have a separated SPV outside of the main group of the company, so it's held outside, and that SPV holds the rights to all of the income that Unique receives, and it also holds a first charge on all of the assets that Unique not only purchase, so as in all the properties we purchase and develop, but also it will hold the first charge to the equity position that we have with the REIT and the other development bond. And so therefore, if anything happened to us, for whatever reason, all of that income and all of those assets are protected. And we then have a fiduciary, we have a law firm basically who act as trustees on the SPV. And so if anything happened to us, they take over, they manage the position. They could liquidate the position or continue the position out until the end of term for all the clients. So in effect, the income supporting the returns and the capital, which would be tied up in assets and positions, is also protected. And from our point, from my point, look, we're open and honest people. I like to look after my clients. I've said it before, we're a family business. Our clients come into this business, they're part of the family, and we look after family first. And we make sure that our clients are protected at all times.
100%.
And ultimately, it's a win-win for the clients, and it's a win-win for us. Allows us to go at this at a much faster pace and develop and build out. And our clients get a really healthy return.
Also, well, the accountants that we use, the way that the money is dispersed.
Also, we have an external firm of accountants that manage all of the disbursements. Whether that's to landlords and landlord and tenants to us, and also to our coupon payments that we pay our clients on a monthly basis. All those coupon payments are managed externally for us.
That, my friend, I think was exceptionally explained.
Thank you.
And if those that don't understand that, look at all those people out there that are selling these rent-to-rent deals. You can't compare them. That is non-comparable. I'm so proud that you've just said that. That, to me, is amazing. That's why Unique is who we are. It's the most secure. The way that you structure it, and this is why we've partnered together, it is unstoppable because it works backwards from contracts, assets, and investors.
Yeah.
We get some fees out of it. We're here as a business, but that's the byproduct of what we've created.
And, we get a question, what happens if change of government?
Well, that was the next thing I was about to say is, because we got that this morning in a meeting. What happens if the government changes? What happens if this? The very quick answer is
nothing.
Nothing.
Yeah, well, long-term, the fixed structured contracts, 25 years. Those positions in place, any government coming in, it's not going to displace loads of people that are either critically ill or have, whether it's mental health or physical disabilities. They're not going to just say, well, we're going to stop that contract now. There's nowhere for them to live.
But what they would do is if they're running, and it does happen, this is not us knocking our competition or the people that think they're our competition, I mean that with respect. If you've got contracts that could be broken and the government changes, like Serco, for example, Google Serco, they're a massive provider, and just go and Google the name. They come out of contracts all the time.
2 months, they can give notice.
2 months notice. If you're an investor and invest in them, don't panic. You'd like to touch wood that nothing happens, but it does happen all the time. That's why we don't work and stuff like that. And you can see the difference, and you can see why we have hundreds of online reviews, and you can see why the business has developed. And again, this is not a podcast to sell to anyone, but we get a lot of questions. We're very proud of it, and we'd like to hope that answers anyone's questions they've got. And on that note, if anyone does have any questions whatsoever, feel free to drop a message down up below, and we will respond to every single one.
Yep. And we have an 86% reinvest level from our clients.
Sorry to change that. It's 87%.
Okay, gone up.
So the last 12 months, 87% of everyone that's invested has reinvested again. The rest of them haven't got the funds to invest. That makes us
proud,
incredibly proud. That is another.
Well done, you, sir.
Thank you, sir. Thank you, sir. That's another podcast. It's another session, as you want to call it. We really do appreciate everyone taking their time to listen to it. We hope it's inspiring. We hope if there is anyone out there that was thinking about investing, this is obviously going to help with that as well. And yeah, thank you very much for watching.
Thank you.
See you on the next one.